Taking a look back at waves here, you can see we did bounce off the 786 only to get rejected out of the golden pocket. And currently we are trading below the 786 again. So I think this move to the green box is likely on the table, as I mentioned in my previous video. Turn on the Ichimoku cloud and the EMA ribbon. You can see the Ichimoku cloud is still pretty far away from the price action, so I'm going to turn it off for the time being. You can see that the EMA ribbon is flipped red, as to be expected, and it is widening, catching up with the price action. You can see our first test of it has led to a rejection, which is to be expected, as we usually never break these to the upside on the first test. You can see here that the downtrend is slowing down quite a bit actually, from this bounce here all the way at the bottom to where we rejected off of the golden pocket was around a 50% move, so it's pretty substantial. But ultimately you can see it's undone all that price action. Take a look at the 4 hourly, you can see we've been testing the EMA ribbon quite heavily, even had a fake out above it. You can see here that we tested the Ichimoku cloud, found resistance, had a further move down. We have tested it yet again and are seeing another move down. So again, we could very well move back down to this green box before we see the bounce that breaks all of these resistance levels to the upside. The Ichimoku cloud is getting thinner here, likely because the volatility is tapering off. If we look at the hourly chart, you can see we have been below the 200 EMA for quite some time here, and have been testing it somewhat throughout this range. If we zoom in here, you can see that this one was actually a fake out. We traded above the 200 EMA here, and ultimately fell back below it. You can see when we fell back below it, we're actually testing it quite a bit throughout this range, which is a good sign. And ultimately, it still sent us further down, but it is a good sign that we are testing this quite a bit. Next time we come up to test it, we could very well break through it to the upside and start a new uptrend. So if we take a look at the RSI on the daily, we could very well be seeing some bullish RSI divergence play out here, but we'll have to see where this stops out. If we stop out down here, but the RSI does not set a lower low, lower than this one back here, that bullish RSI divergence could play out and send us into a new uptrend. But if it doesn't, if it manages to break this previous low to the downside on the RSI, it'll become invalidated. So some things up here, I really think we're going to move down to this green box of support before we find a decent bounce out of here. Now it could be all the way down to the lower trend line here, which is from this descending channel on the macro scale. And this will be anywhere from around $7.50 all the way up to $9. If we see that bullish RSI divergence I was talking about play out, this could very well send us into a new uptrend that could potentially break all-time highs, but we'll just have to talk about it when we get there, or if we get there. So be on the lookout for a bounce from this zone. If we do somehow manage to kind of trade sideways here and then bounce, we could very well move all the way up to this upper trend line from this descending channel before we see a rejection. If we do see a rejection here, we really need to find support off the 618 so we can really keep testing it to the upside and then make our way back to this red box of resistance I had drawn. So that way we can also break it to the upside and use it as support. And this area could really be anywhere between the 0.5 level right here on the Fibonacci retracement around $22 all the way to somewhere maybe even above this green line a little bit at around $25. This is all I have for waves today. If you enjoyed this video, go ahead and hit the like button. If you haven't subscribed already, go ahead and do so, as I try to post content daily. As always, this is not financial advice, and I'll see you in the next one.